Alrighty, so welcome to today's session. We are going to discuss in terms of the market update, looking as well from a bigger time frame perspective, looking from what happened in January. So we're going to look in terms of the market outlook on what's bound to come based on forecasting for the monthly, the weekly, and the daily, and looking at certain strategies of what we can implement based on current trades. As a disclaimer, though, please note that these videos are for educational purposes only and not to be taken in form of advice. Mind you that past performance is not indicative of future results and that trading is risky no matter what. So take full responsibility of your own trades. And if you need to know more, please visit our website at www.esttrader.com. All right, so let's look at first on the macro fundamentals perspective here based on the monthly. Monthly didn't look good in terms of the S&P finishing it up. So there is a pattern called, or what we call Gravestone Doji, where simply means that a lot of buyers push the price to the upside, created demand after all this here, where you can see all the big push, and then now currently stabilizing itself, where it created also a blue sky territory. 3,871.32 right there. So what normally happens, it's currently noticing what it's doing at this point. It's trying to fill that gap. So once a proper lower high will be formed, and there will be a better price point of actually selling somewhere here around the 38, if it comes back around even 38, 38.20, 38.30. So 28 days only for February, right? So there's going to be either a motion to the upside and then this is going to drop. However, if we also look at the week's reports, there's going to be here ISM manufacturing PMI that happened early this morning. Aussie, if we're going to discuss here just only the high impact news, please also make sure that the news here on the Forex Factory sometimes is totally different to the news with FX Street. So just be aware of those. And Tuesday, there's the Kiwi employment change and employment rate. And there's also some like low impact news. But once again, on FX Street, this low impact news could be medium or sometimes high impact. RBA, Governor Lowe is going to speak through there. Wednesday, there's few low to medium impact news based on the euro, the pound, the dollar, ADP non-farm employment change, ISM services PMI. And then Thursday, back to high impact news with the pound, asset facility, monetary policy report, MPC asset purchase facility votes, official bank rate votes, policy summary, official bank rate, and then Governor Bailey is going to speak through there. Governor Lowe is going to speak. Interesting. There's two Lowes. And then Friday, of course, we have unemployment rate, non-farm payroll, average hourly earnings, and then employment and employment rate. All right, so these are the things that we need to be aware of. So there's a lot of good opportunities actually within the markets itself. So for the weekly, from a very bearish candle, however, notice it's also basically still in an uptrend. Where the price is at demand, this is actually a really nice price point of buying. However, notice here it created a new lower low today, 3664.99, 3664.249924. So that's 2 ticks, because 1 tick is a quarter of a point. 4 ticks equals 1 point in the futures market. All right, so here, if the price will come back somewhere around here, around the 3,800 mark, and once it forms a shoulder, or right shoulder as we call it, within that shoulder, on the other hand, a lower high, boom, this is going to come back away, perhaps around even the 35 area. But we'll look into that when time comes. Volatility Index, despite it being up 1.58, it's only down 8.7. So notice that a lot of force over here, consolidation Perhaps it can even come back down around the 29, 28 area. So in the next 2 days, and then so forecasting that by the non-farm payroll happens, this is gonna be boosted to the upside. That non-farm payroll happens, this is gonna come back down. So today's Monday, Tuesday, Wednesday, Thursday, Friday, and then start with Thursday, Friday is gonna hit. So that is what the plan is going to be. The Dow is not as strong as the S&P. S&P is 1.5, Dow is only 0.8. So also created new lower low, still higher low through there. Same thing in terms of the monthly, created also a doji through there, almost a Gravestone Doji, something like that, very similar. So if it creates that lower high part, then if we're talking here the moving averages as a form of a floor, then you'll see here the 50th percentile, 62, 28, 667, and 28,053, somewhere there within this range as a form of a correction. However, longer term though, notice is still very bullish. You have this impulse. So from a bigger point of view through there, the 38% is approximately here, 26,290. As over 38, then you have your 50th percentile. Okay, let me erase this. Actually, maybe this is the better one. I'll erase this one and use this one, which is more accurate. Okay, there you go, 38. 26,290, which is also the lows of these two monthly candles here of November and October. 50th percentile, which is also from this demand, 24,742. And 68, we're creating a confluence within this demand here, which is in conjunction with the trend line based on that. Of course, there's a new one through here too. However, certain conditions also has to be met. And if I'm gonna draw a trend line from here to there, so price is already below. So this one, there's a lot of distance from the current price point with this. And of course, there's also one right there, but we're gonna create a fan, currently breaking out, 1, 2, 3, 4, somewhere there. All right, so that's within the monthly, weekly time frame. Very nice. So there is a, let me check through here. The high of this one, 31,269.51, 31,300, 31,269, 300, 237, 130, 1269. Oh, dang it. So this is the new high. You have a higher high, no lower high. But if price goes below the 8 or the 10 without a lower high, it's not really that good. So we would prefer this one to head back up. One somewhere here, back to 31,000, creating a lower high, better to short. So this could form what we call a rising three, or sorry, a falling three pattern, 1, 2, 3, then so that would be a better bet. All right, dollar index, which is the major hub. Very nice. There are a lot of things here going that you can't really see that much. I'm not really to delete it as yet because this is also my notes. Potential evening star pattern, I'm sorry, morning star pattern here, where you have a bullish bar that will reach approximately 92 through there to fill in basically this gap all the way to around 92.60 before it could potentially drop once again to retest this area of demand. However, if it doesn't want to, where you have normally a morning star and then a breakout, and then you have an M3 happening here, then it's going to head back to 102 somewhere sometime in the long run. So mind you, with everything forecasting, if we're looking at the whole economy, everything's just too inflated, where it doesn't make any sense. Yes, they need to perhaps create some form of quantitative easing to print more money with this pandemic. Where to from here, who really knows? But at one point, when something's too inflated and they need to create some form of deflation in order to get the price over the economy where it should be in terms of a correction component. So if the market, so globally, where there's too much of a move, so since 2009, normally the market cycle happens between 4 to 5 years. But for it to happen now, right, 10, 19, 20, 21, 12 years of it going up, it's too much. So sometimes when it's also too much, when there's a lot of movement, the danger point with this one is that it's going to drop. It's going to drop faster than when it went up. So very similar to 2000. We'd already happened in 2007, then 2008. Actually, when this one broke out, some economists were actually even technical analysts were saying that this is going to drop back down to 200, but it's pretty unlikely. But nevertheless, when something's too high, in order for that to be reduced, they need to increase interest rates. When interest rates have been increased, then lending will be minimized. Likewise, for everything, housing markets, everything will basically drop just to stabilize the markets itself. And then when that occurs, then the dollar index will be basically pushed to the upside. So very similar to here. And so from that perspective, if they choose to do that, then that higher low basically will occur and will continue to go to the upside. However, if it doesn't want to, since you have a lower high over here and you're dealing here with, say, patterns like double tops, 1, 2, when the neckline has been broken, then easy price of the dollar index will come back down to 78, 76. Not good for the US, but good for other countries to come here to basically purchase and go for a basically holiday. But not good for Americans to travel overseas because it's going to be too expensive. Right? These are based on the purchasing, what we call PPPP, purchasing power of parity. So triple P, sorry. Okay, so they need to do that at one point. However, if we're just dealing here now and just on the monthly, then 92, 93, somewhere there. Weekly time frame. So if the higher low that got created, actually, do we have any higher lows happening? Probably not. Low 90.08, 04, so nothing. So there could be a potential continuation before a higher low will form. So they need to break this to head towards somewhere here, which is mainly more the equilibrium. But from here to here, 50th percentile is right there, 91, 98. Actually from there, a bigger pattern from that impulse. So broke out 23, approaching 38, which is 91.32, and then 50%, 91.97, say 92, somewhere here. Okay, so gold, on the other hand, it is just consolidating. They're basically lagging right now. And when that happens, this is also going to fail as well. Gold, I'm sorry, let me go back. I was going too fast through there. Let's go to oil in terms of monthly. So within the monthly, it's topping up the 78. Still basically overall downtrend since 2019. And at the same time, it is also maybe a little bit more room, but it's approaching this major trend line. If it doesn't want to create a new higher high, lower high like this, there's a lot of room for this to head back down to 44.80. That's more than $5 basically a barrel. and heading back to 50th percentile, but they need to create a new, either new lower low or high low somewhere sometime in the long run. So from March, right? Actually, that was March with the pandemic. February, excuse me. So it's February, March, then we'll see all the way back down here. And weekly running out of steam. Let's see by the end of the week whether will be pushed to the upside. Daily time frame, still within that level of demand, but notice in terms of that lower low as well. So we'll see, just be aware. So this movement is being triggered by that bullish candle. This bearish candle is being triggered by this bearish candle through here. And then this bearish candle will be interesting. We'll see whether if this bullish will be pushed by that, or a new bearish candle will form through there to be pushed by that. So we'll see when that happens. Of course, overall, still bullish to get around the 55 area before it could potentially drop. But price is already at supply or equilibrium supply level. Test trade, then it'll be good to. It's a low risk, high probability. But the problem is that you're going against the trend. That's why the test trade will just be a better strategy through there. Brent or crude oil, same thing. So last month almost touched the trend line, supply level, weekly, same consolidation. They're trying to push it up. 2 Gravestone Dojis in a row, but you have that very bullish candle through there that we cannot ignore. So if this will be broken, then that bullish candle has been superseded by sellers, and then you'll see fit that the daily time frame, a breakout will happen, and then it will go through within this price point, 52 area. All right, let's look at gold. Gold was bearish last month. So the high of last month, 1959.33, 1965. So still a lower high. From a bearish to bullish to uncertainty. Currently, it is on a state of decisiveness, whether if there will be pushing the price to break out from this trend line and that trend line within that higher low. If so, then it will go back up to there, and then continuation of the trend to the upside. So let's look in terms of the weekly. Weekly, you have an M3 to short, you have an M3 to go long. Didn't want to play that lower high. In my opinion, this lower high still, or this M3 will still play a big role. Currently within the squeeze. If it creates another lower high, and we'll see here on the daily, bam. So they tested 1870. So if I'm going to use this one as a force, then I would rather sell. Risk is very minimal. Currently the high of this, the short, where the potential price point will be heading, if it breaks out, 1, 2, back down to 1760. So that is my forecast with gold from a stabilization point of view, with this very bearish candle through here. So we'll see, though. So I'm just excited just to see where the theory is going to head based on the up and coming news. Copper created a Gravestone Doji. Very nice. Can come back down here to $3.25 all the way here to $3.11 just to fill the gap. Some bearish with copper as well. Weekly time frame, of course, preferably if the price will head back up here within this supply level, $3.60, and just imagine this is gonna here and then back down to here as a demand. So that So that's where the forecast. However, if not, then you have a bearish candle through here, create a new lower low, and then probably stability. Then it's gonna head back this way, and then this way before it can continue that way, or you go here. All right, so those two. And then daily time frame, no go. Why? Because price is at demand right now. It's an area of demand. Better to go long and then basically short through there. Okay, so it all depends, okay, because you have Aussie news as well today. TYX, feeling back to feeling that gap, but still very bullish. I'm still bullish with the yield. Yield can go all the way to 22, 24. Mind you, though, that the dollar index is still lagging, so it still has to follow. And weekly correction from this very bullish from the beginning of Jan. Won't be surprised to go to 21, 22. Daily time frame finishes like this, back to an M3 to go long. All right, so that's based on the micro fundamentals. Any questions with the macros? Nothing?
No, I was following. Thank you.
All right, then let's go with the majors against the US dollar. I'll go first with the Aussie against the US dollar. So notice price is already at the level of demand, very similar with copper. It's currently following copper at this point. It's also following the gold as a macro fundamental, but copper is the major one at this point. So if you look at the monthly, same, you have a very nice doji right there, which a potential evening star pattern is going to happen, still based on the downtrend area of supply, which is very strong. Of course, the major one here is at 80-cent mark. So I am bearish with the month, with the Aussie against the US dollar, since I'm also bullish, despite it's not the Aussie is not part of the geometric weighted mean of the dollar index, but it does follow against the US dollar itself, of course, just a major, because since the base is the US dollar. Nothing on the weekly, just simply just filling that gap through there. And currently, since price is also at demand, a better reference leg of going long at this point. Unless a clear breakout, because there's Monday, today. We have a cash rate and RBA rate statement at 7:30 Pacific Standard, 7, 8, 9, 10 Eastern Standard Time. Okay, so just be aware of that. And from a stability, low risk if going long because you're in an uptrend, and then selling back in around 76.90 or 77.40, somewhere there. Euro, very nice. So finally, just been patiently waiting for this. So with the monthly, there's this room that could potentially drop through there. Lower high, depending on what will form from a lower high perspective, that could be just a minor before it can retest to go beyond. However, but since I'm forecasting the dollar index to be bearish as well, dollar index to be bullish, then medium term, short term, medium term could be just somewhere around here back to 118. I'm just waiting for the price to break out, heading towards that 119.76 on the 50th percentile. So right now, 2064, just touching the 38.2. 38.2 right there. And I'm waiting for this to break. And then basically from here, it's a nice, beautiful, I call myself just a Hail Mary technique, or head and shoulders, right, sorry, left, head, right, breaking out, 50, 62, 1887, which is also a really solid one right there. So just a matter of time. Of course, since the price already at demand is to close some profits right now, and then if you come back as a correction, 1, 2, 3, sell it again, and then boom, close the positions, either reaches major 119. So currently T1, T2, T3. All right, so that's with the euro. Hang on a second, maybe I should do that now too. Okay, let me just close since it's already a good price through there, I'm just gonna be closing. Yeah, closed 1/3. Alrighty, so that's with the euro. Any questions with the euro?
I'm good.
There may be some form of stability, depending. So here, see, it's because of that higher lows. There's a lot of buyers here supporting this price. But when this one breaks out, then easy, you're gonna basically be selling hard. So that would be the plan. The plan is to sell more when this one breaks. All right. Or even better, it has to correct itself, and then from a correctional standpoint, close the position. Okie dokes. That's with the euro pound. Looking at the monthly time frame here, so created a shooting star through there that could also potentially create an evening star. If an evening star will form by the end of February, then you have a lower high. Easy. They need to retest this lower shadow here back to 116, 118, somewhere here to create a proper higher low. But we'll see when that happens. So long, that's long term. Weekly time frame, stability. The high of today was 37.57.8. Yeah, so lower high. Yeah, that high was still high. 58.9, 57.8. So looking good. Of course, on a 4 hours, you have that was a good one, but because this was such a big drop, so if your favorite one, notice it's touching it again. This is Trong. This is your pair that you analyze, right? So after how many times, potentially there's another movement through here, and this is also where I was saying yes, absolutely. And now from a lower high perspective, what's next? So a good one would be if the price will come back somewhere here, 37, 37.40, better on this side, and this is going to fail, which I have no doubt. So there's 3, see 1, 2, 3, see breaking out now through this trend line. So, but price is between, right? So it's still within the trend, technically speaking. So back to buy and then sell. All right, any questions with the pound?
No,
All good here.
Got in last week and I was able to catch that strong candle. So
okay, cool. All right, the Kiwi. Oh, hey, Jared, how you doing? Welcome to the class.
Thanks.
Kiwi, same. You have a nice, beautiful doji. Price will head back around the 72.50 at 90 pips. That would be great, but I'm also bearish with it. Potentially another evening star that's going to happen, and then all the way down to the 50th percentile and the 62 within this impulse as well. 68. Yeah, that's a good 300 pips to the downside, right? 69, 70, 71. Yeah. Weekly. And nice, forming a beautiful lower high. Well, I prefer the price will back, which it did already actually. Yes. 70 to 20 before it came back down. So imagine by the end of no, 5 o'clock plus 4, 29, 9 p.m. tonight. Potential M3, you have a lower high, M3 to short. Poof, same thing, you can go all the way 70, 50, back down to 70 or 69 as we have basically discussed on the bigger time frame. 4-hourly time frame, cool. When this one finishes in 21 minutes, 56 seconds, we had an M3 to short based on that lower high, all the way down through here, 71, that's a 60 odd something pip. Okay, so that looks pretty neat. Dollar CAD, also one of my favorites. So there is a potential morning star all the way to 130 is the projected price. Weekly time frame. From the doji breaking out. So there is a potential M3 as well by next week. Daily time frame back to area of supply. Higher low. Better one actually when it dropped through here, 127.40. That's another 90 pips. But from the closing, closed at 27.74, almost 70, 60, 70 pips to the upside at this point in time, which makes sense, 62. So still pretty neat. So from a lower high perspective, on the other hand, so just be aware, back to supply. It will come back to the demand here around the 27.60, then even better. But I believe it's just a matter of waiting. So this sell is no longer, that's all you can basically get because it's just too strong. Close, back to buy on a 4-hourly time frame. That could later on 27.60. That's still pretty good. 40 pips for a 4-hourly time frame. Very similar with the Kiwi. Back down to say 71. That's a 40, 50 pips. All right, dollar Swiss finally breaking out. So left, head, right. So similar to what we have discussed here. I'm just going to clone one. Oops. Dang it. I'm going to move right there. Clear breakout now with the biggest error supply through here. So projected price points is within these levels, especially here on that 90 mark. So I'm planning to actually buy more and just waiting just to correct just a little bit. But actually that's quite a lot right here, 20, 30. So there's two things, either to close all positions right now, and then if we come back to 89.30, is to buy back in for the potential 90 pip right there, sorry, 90 cents all the way up there. Or, I mean, there's multiple that we can basically create, close 80% of the positions, come back down, buy back in, add in another 40, 50%, and then continue through there. If not, then yeah, 80 or 90, closing 90%, 10%, leave the 10%, and then when it reaches back to level demand, buy back just half of positions to back to 80 or 90% of the positions if you wish. So there's a lot of multiple ways you can basically do it. All right, so but because it's very bullish, and there was a Swiss franc actual also with the dollar index heading up, finally broke out. So yeah, I'm bullish with the dollar against the Swiss franc all the way down here, but all the way up here around 90, 91 even, right? 90, 91. And then weekly, same thing, further up to the upside. Mind you though, that after this breakout through there, major one here from this trend line. And then of course you have a bigger one that is continuation through here too. So 1, 2, 3, this is from a correctional standpoint, counter trend trade, and then sell through there if it because it needs to create another higher low, proper higher low, to be honest. All right, so with the dollar Swiss, so dollar yen, very nice. Currently touching the 8 of the 10 right now. You have a bullish engulfing pattern, which engulfed basically the month of December. When it engulfs like this, then there's a lot of buying pressure, right? There's a lot of buyers interested with the dollar against the yen. So the question is, can it create a proper higher low and then like maybe March or April? So by April, there would be an M3 methodology go along to retest basically these highs here, but 110. Right, weekly time frame, very nice. You have currently, if it finishes like this by the end of the week, from a higher low perspective, easy. It can go over to 106.50. So daily, very nice. Back to supply. So same thing with this. Would love this one to come back down to correct. Buy back in from a level of demand 104.40. So that's 50 pips to the downside, and then push by buying. So the idea is to buy demand with this, and you can't basically go short at this point. I mean, you can from a shorter perspective, but you only have that small window. All right, so that's the market outlook and market update from last week to this week. Any questions with what we have discussed so far?
I'm good.
All good here.
Cool. All right, so that's basically it for this week. Your homework is basically to create simply just to create a plan on what you want to do based for the week, depending on your trading style. If you are a day trader, then better buy at demand rather than sell at supply, because depending on which pairs you're trading majors against the US dollar, of course. You'd rather be a buyer than a seller. Can you sell too? Can you be a seller rather than a buyer? Yeah, you can, but just be aware of the time of potentially only the small amount of time where it could lead to. So for example, we'll take the euro against the US dollar. Basically bearish with this one, just waiting for the neckline to break. Currently at a level demand. Smaller time frame, really nice. Prices at demand. Can you go long? Absolutely. Why? Because of the overall trend. Long term. Can it come back up over 120.80, 120 back to 121? Sure, definitely. Right? All the way through back here, 21.24. That's a 60 pip move to the upside. And that could happen in 1, 2, 3, and then another before it can go poof. Now then, tomorrow there could be, normally from a demand perspective, stability will form. Either they will retest within that low of this, 120.58, 120.53. Current low, 120.62, almost. It's testing. So from that, tomorrow because there's a lot of force today, like this one right here, so I just want you to observe through there. And so as an observer of price, observe through that, and then observe through that, observe through this, and then tomorrow it has to create some form of stability. From a stability standpoint, then a potential morning star, or a potential what we call falling 3 pattern, 1, 2, 3, and then bam, drop. Once that neckline has been broken, then price will go to where we want it to be down here. Because mathematically, once that neckline has been broken from the area of strong area of demand, which is the neck, from the head times 2. Okay, so from here to there, it's also the same as from there to there. through, that's based on a mathematical theoretical perspective of head and shoulder patterns. All right, so that's a thing that you could do. What is the plan? Can you trade the cycles? Definitely. But if you're a trend follower or a trend follower swing trader, then you're waiting. So you're going to see impulsions or like your money making money, losing money, and then making money. So that's why emotionality wise, in terms of emotions, if it goes against you, control that emotion of fear, control that ego of fear. And then from there, when you are in a space of empty mind, attack more. But you need confidence by doing that. Okay, by attacking in terms of strategy, you gotta attack, sell more. That's why if you're already shorted through this side with me, with the product trade alerts, close some, comes back up, attack and sell some more, because this is where the plan is. Okie dokes. So yeah, you can create. So your goal is to be not lateral thinker, but to be a unilateral thinker, create different strategies for your trading plan or for your style of trading. Okay. If there's no questions, you guys enjoy the rest of your morning and afternoon, and we'll see you tomorrow.
Thank you.
Sounds good. Thank you,
Thanks,
Ray.
guys. Bye.
Yep. Good day.
See you guys.